I think these events will unfold very rapidly. And I think that when certain technical events occur, oftentimes that's when you suddenly hear, oh, that's the reason for that. I
Hmm.
hadn't been thinking about that or hadn't been focused on that. All I've been looking at is AI. Uh, I think it's going to be very speedy. And I think one of the major triggers will be, and this is hard to link to that, why it will cause it, but it will reflect it or predict it, is the explosion in the miners versus gold.
Okay.
When that spread breaks out, I'm arguing they will explode, and that will not happen in a vacuum. In other
Okay.
words, it's not because just some technical breakout. You'll have peripheral headlines suddenly, bang, front and right in your face. And people will then say, oh, gee, now I understand. I wish I'd bought those a couple of years ago. I wish I bought that March break, et cetera, et cetera. I think it will unfold very rapidly. And I think
Yeah.
by the end of the year, we'll say, yep, it's underway. In other words, rather than looking at AI and semiconductors, which I think have topped, in fact, we pretty much nailed it in MSA reports a couple months ago when it was topping. Um, Aside from looking at that, look at the T-bond market.
Mhm.
Punch it up on your screen and keep it on there. Okay, keep it in one quadrant of your screen. Its price continues to erode. Now, it made a collapse low back in 2022. We're 2020 to 2022. T-bond futures, is 30-year bond futures, went from 190 in price to 117 and a half. Wow.
Wow.
Much of that occurred in about 6 months in
Wow.
2022. Since 2022, price action of T-bond futures has done this sideways, trying to get something going on the upside, meaning a drop in yields.
Hmm.
They can't do it. They've had three waves of effort to do that. And several months ago, back when price was 114, we said, that's it. This base is not going to hold. The low end of that base was just below 108, by the way. Right now, where are we trading? We've been down to 108 again.
Hmm.
We think we're going to slip through that. Now, the problem is this is the part of the debt market that the Fed does not control with the push of a button.
Hmm.
They can influence short-term rates, but they don't have much effect, if any, on the long-term bond. And they can't afford not to because it's too dangerous for it to catch on fire. Uh, so they have to print, print, print. And that is the lifeblood of money, of gold and silver, is the degradation of the thing that you're measuring them by.
Yes.
Dollar, a yen, a euro, etc. Uh, so that will accelerate. Now, that's one thing you got to watch. You mentioned a big event. Yeah, that's
Indeed.
that's that's a prime one. But also private debt is very bad right now. It's not being talked about much, but commercial real estate debt is in dire straits. There's a lot of credit card debt that's very extremely high levels, past due, et cetera, et cetera. Mortgages are more and more past due,
Hmm.
delinquent. And
Hmm.
yet this isn't a topic of conversation.
Hmm.
But unlike 2008, where we had a couple banks fail and a lot of real estate related loans imploded, mortgage crisis, this time it's far bigger than that. It's not just mortgages, it's private debt, it's corporate debt, it's government debt. And gold knows this, and it knows what the central banks will do about it. The yen looks like, when we look at it, regardless of what it's called and the fundamentals of it, just looking at the charts, the momentum charts, let me stress,
Hmm.
annual momentum in particular, meaning we measure month to month action in the yen futures relative to a 36-month moving average, which is like a 3-year average. So it's either above that average or below. Well, obviously it's below right now. But when we measure it and plot it, it looks like a basing action for real. And the recent plunge that took out the prior low a year or two ago, which took it out in recent months and therefore caused the Japanese to panic even more,
Hmm.
uh, looks like that might have been the low. Now, it doesn't mean the governments are going to succeed in their debt problem, but this yen problem might somewhat abate, but that means the dollar could weaken relative to the yen, which is what, okay, now, when we plot the dollar index, which is a popular vehicle that people look at as far as what's the value of the dollar.
Yeah.
Well, it's not the real value of the dollar. All the things that the dollar index measures is primarily dollar versus euro and dollar versus yen. Those constitute over 70% of the entire
Mm,
dollar index. If you look at most currencies in the world, they're going up versus the dollar. Dollar's going down. Euro has had a pullback recently, but it's been going up over the last several years, has gone up in price versus the dollar.
yeah.
The main culprit that has kept the dollar index from collapsing, and we think it will collapse, meaning when measured against the euro and the yen, is the yen,
Mm,
because it's been the one really negative major component of the dollar index, hence has helped keep the dollar index looking, oh, to most people's eyes, okay.
mm,
Uh, our momentum work on the dollar index is no, even this silly index is not okay. It's broken major structures. And this holding action we've seen for the last actually over a year now, the dollar index, it's gotten very narrow, congested. Um, that when it breaks down, the dollar index will be weak. The dollar will be weak. And so rather than the yen being the weak issue, the dollar will be the weak issue.
mm.
That still doesn't help abate the bond crisis, but it will shift the focus, which will surprise a lot of people, I think, that the US dollar is weak, measured by that un mistakenly weighted index, let's call it. Average person who's not even in the market. Yeah, well, remember 2007 through 9, even the guy who wasn't in the stock market was hurt badly.
Yeah.
Lost his job, his wife lost her job, lost his home, et cetera, even if he wasn't in the stock market. Uh, I think the financial repercussions of this long building crisis is going to be widespread.
Mm.
Not just U.S., by the way,
Yes, no, indeed.
Europe, Japan, et cetera. When we look at stock markets, we measure the U.S. stock market as being a bubble. We measure the Japanese, the Nikkei, as being a bubble. Some other bull markets around the planet have gone up with the U.S. market in general, in sync with it. Europe, for example, to a lesser extent in terms of
Hmm.
dimension, and even the Shanghai Composite. But if you look at the Shanghai, which I think is deteriorating right now, and I think likely if it does, we will too. They're part of the world after all. Don't treat them separately. But it's not a bubble. The Shanghai market price is double and a half where it was in 2009.
Mm.
Whereas the S&P is a dozenfold where it was in 2009, or the Nasdaq 100 is like 20 plus fold where it was in 2009. So we've had verticality, unlike a lot of markets. So I think the U.S. and Japan, particularly stock markets, will be vulnerable. That's going to hurt people. And we know what happens when the stock market breaks. That's when all your data points go negative. And by data points, I mean the stuff the Fed likes to talk about,
Yeah.
like, oh, the job market looks reasonably steady. Well, if we go back and look at 2000 top to the bear low in 2007 to 2009, and overlay a chart of unemployment data, unemployment didn't give you a warning.
Hmm.
It told you after the fact, said, oh, we're in a crisis. Okay. But it didn't tell you ahead of time. So for them looking at that as some kind of leading indicator, it's totally not. It's lagged to the stock market. And therefore, that means the average guy is going to get hurt. I don't think governments are going to solve it. I think this one is the bigger one than we've ever seen in terms of negativity,
Hmm.
especially once the stock market breaks, which will then bring all the other data points with it. Uh, I think a lot of changes will occur in things we take as norms. So for decade after decade, we've had like a two-party system in the US, the Democrat, Republican. Uh, Same is true in a lot of other countries, but they're starting to fragment more because there's a sense of growing desperation among some, and it'll increase in terms of the population perception, that this isn't working. This needs to change.
Hmm.
What do I mean by this? Well, maybe, we don't like this party anymore. Like the GOP, for example, is no longer what it was, Republican Party, what it was 10, 20, 30 years ago. It was a Reagan party. It was a conservative party. It was a Barry Goldwater party. Those guys have retired and left the party. Some of them have even quit their congressional seats. And it's become a Trump party, but even the Trumpers are now split.
Hmm.
There's quite a few major advocates for Trump during the election time that have now totally gone the other way and said he needs to be gone. He's totally not what I expected. So that party's fragmented. The Democrat Party is now fragmented. And I bet that each of those two parties, or neither one of them, are majority parties anymore, where the Democrats are going to get 52, Republicans 48, or et cetera. They're going to fragment so badly that it wouldn't shock me to see third parties ascend.
Right.
Like in some countries in the world where it's not the two major parties, it's often a third party that helps
Indeed.
one of the majors take office. Okay.
Yes. Yeah.
That's the kind of change we could see. Another one would be maybe we don't need fiat currencies anymore. Maybe that didn't work. It's only been around one long human lifetime, after
Mm.
all, on back paper. Uh, or, the Fed really hasn't been doing a good job. They've been causing this boom bust cycle pattern. And you might not have a Federal Reserve in a couple of years. Wouldn't surprise me. These are the kind of changes that are seemingly off to the side, but they're really part of the core issue. And because after all, politics does influence markets. Okay. So it's not separate. And now more heavily so than ever in history, probably, where government's intervention and buying of companies, et cetera, is they've become a market factor. Um, so you asked me what could change, and I think these are the kind of things you could look off the left and right and see, my, all of a sudden this thing I thought would be here forever isn't here, or this is questionable. And I think therefore the market forces we're talking about will generate this rethink.
Mm.
I'm not going to predict how it's going to come out, but I think there will be a massive rethink. I think these events will unfold very rapidly. And I think that when certain technical events occur, oftentimes that's when you suddenly hear, oh, that's the reason for that. I
Hmm.
hadn't been thinking about that or hadn't been focused on that. All I've been looking at is AI. Uh, I think it's going to be very speedy. And I think one of the major triggers will be, and this is hard to link to that, why it will cause it, but it will reflect it or predict it, is the explosion in the miners versus gold.
Okay.
When that spread breaks out, I'm arguing they will explode, and that will not happen in a vacuum. In other
Okay.
words, it's not because just some technical breakout. You'll have peripheral headlines suddenly, bang, front and right in your face. And people will then say, oh, gee, now I understand. I wish I'd bought those a couple of years ago. I wish I bought that March break, et cetera, et cetera. I think it will unfold very rapidly. And I think
Yeah.
by the end of the year, we'll say, yep, it's underway.